A Supreme Court appointed panel of experts examining India's regulatory mechanism in an investigation linked to the Hindenburg allegations has said that prima facie there has been no price manipulation on part of the Adani Group and that the conglomerate had taken necessary steps to comfort retail investors. It's also said that it appears there was no regulatory failure on the part of the market regulator SEBI. Joining us now, Krishnamurthy Subramanian. He's been the Chief Economic Advisor to the Government of India. He's also an economist. He's a professor of finance. He's worked on India's post-COVID economic strategy. He's also written, among other things, on Adani businesses. What are the implications of this, Dr. Subramanian?
Thank you very much, Vishnu, for having me here. Let me first start by reminding viewers that at the peak of the Adani episode, I had written this piece. Primarily, the thesis was that the Hindenburg report had actually called Adani the biggest scam ever. Now, when one makes a claim like that, it is reasonable to say that, you have ruled out all plausible explanations. If you have to say there is fraud happening, then every reasonable explanation, and when I say reasonable, it means actually one that does not involve fraud, has to be ruled out. What one saw when we look at the, the stock price, and having taught valuation for a living and having built on, Ashwath Damodaran, who himself is actually one of the experts on valuation, what one saw was that the stock price of Adani increased post 2021, primarily from March 2021 onwards. And if you would recall, that was the time when the post-COVID budget was presented and the Indian economy, changed tack to invest far more in infrastructure. And investors actually in stock markets interpreted Adani to be a beneficiary as an infrastructure enterprise. You add some, irrational exuberance, which typically does happen whenever there is any regime change that happens in the economy. And the change towards infrastructure investments in India was indeed such a regime change. Then you have one possible explanation. As I would like to make very clear, it's not the possible explanation, but one possible and reasonable explanation for the stock price, which basically then says that, the claim that it is the biggest fraud in history is not right. I actually feel very, very happy to be vindicated by the report that has been submitted to the Honorable Supreme Court, where the panel of experts clearly says that they cannot find any evidence to suggest that there was any fraud involved. In fact, I would also like to mention that a couple of weeks back, in the Mauritius Parliament, the president there also made a statement that there are no entities, that have been discovered doing something hanky-panky from Mauritius onwards. So I think that is the key perspective for us to remember going forward. And I've actually looked at some of the measures that have been suggested, in terms of related party transaction disclosures, etc. And I have many more ideas to actually add to, what the expert committee has mentioned.
I just wanted to look through two key points over here, which the Supreme Court panel has actually focused on. They've said there is no law which has been violated in the rise of Adani share prices. Isn't this critical to the entire issue?
That is extremely critical. So they go into, two key aspects. One is the public holding. Second, they actually look at, disclosure of related party transactions, in fact, and a third part, which is the stock price manipulation. And by looking at the, evidence, actually the panel included several experts and they've gathered good evidence. What they find is in none of the three do they find any convincing evidence of fraud or manipulation. And that is critical. What they do also, provide evidence for is the fact that post the, this episode, a retail investor interest in the Adani stock has increased. They also find that at the new level, the Adani stock price is quite stable, which actually I interpret as some of the irrational exuberance that was there, in the stock price before this report was published. I think that irrational exuberance has been taken out from the stock price, and what we've now got is basically just a reflection of the fundamentals derived from the regime change towards infrastructure and the value that especially revenue growth that the Adani, group of companies can get. So I think that is extremely critical when we look at the fact that, having looked at SEBI's, data that SEBI has shared, and all the other evidence, the expert panel has come up with the conclusion that there's nothing hanky-panky.
There have been reactions now coming in. The Congress party has said, and I find this interesting, that, Jairam Ramesh writes, given the reputation of the members of the committee, we do not want to say anything more on its report except that its conclusion was already anticipated. Isn't that bizarre that there is aspersions being cast, it appears, on the basis of that sentence, on the people who are extremely distinguished? And so my question is this: was this panel of people who were randomly picked, or people with questionable, integrity? So,
Vishnu, I can actually tell you, among the panel of experts, there are two people whom I worked very closely with. Mr. K.V. Kamath, when I used to work with ICICI, he was the MD and CEO, and, on a project, I had worked with him as well at that point in time. And Somashekar Sundaresan, whom actually I've been, co-member on two committees, both the SEBI Corporate Governance Committee and the PGNI Committee. And having known these individuals, these aren't individuals who would basically do the bidding, of somebody, who somebody tells them to do X, they'll do X. These are independent, minded individuals, and they're experts as well. I think, this has become a trend which I actually would like to, strongly discourage, that when the message does not seem to be fitting the priors, there is a tendency to actually call names on the messengers. I think that is a tendency that must be avoided.
Sure.
The particular instance that you mentioned is precisely about trying to call names on the messenger just because the message is unpalatable.
One more, a couple of other points which have just appeared now. The Congress says that LIC, the Life Insurance Corporation of India, was the biggest buyer of Adani securities with the purchase of 4.8 crore shares when the share price went up from 1,031 rupees to 3,859 rupees. This raises the question in whose interest LIC was working. But doesn't the LIC, isn't it bound to invest in those properties that it believes it has to invest in? Does it imply that it's working at someone's behest?
I don't think so, Vishnu. World over, insurance companies, given the capital that they have, they invest in, in companies. They, in fact, occupy board positions. This is not something that is peculiar to India. And, in the interest of their, of their security holders, their insurance holders, they need to invest in companies where they expect, stock price appreciation or overall, their money to do well. And, if you think about it, there are many retail investors that would have invested as well. As I wrote, as somebody who's taught valuation for a living, if you go back to 2021, it would have been a good investment given the regime change towards infrastructure investments. And, again, a reasonable, explanation can be that in its judgment at that time, LIC actually invested. It's very important to keep in mind that many times, hindsight is 2020, and, after the event, this happened a lot actually, in another instance, sure, actually, where if you look at some of the bank lending that happened, where post the, discovery of default, there was basically, the use of hindsight bias. I think we have to be careful. These are decisions that are taken at that point in time to use information that comes later, then say, oh, X should have been done. It could have been just, judgment. Right. And in my opinion, actually not necessarily bad judgment either, because the stock price did indeed appreciate. And during the period, during which this appreciation happened, the policyholders of LIC did, sort of get benefits. And as the report has very rightly pointed out, now the stock price of Adani has stabilized at a level which I interpret as without the irrational exuberance. So overall, I think even with the decline of the stock price, I think the, LIC investment seems to have made money, which is actually good news for the depositor. Let me just
go through another couple of points which have been raised as a counter to, to the report itself and its findings. SEBI has been unable to convince itself that the FPIs contributing to the fund are not linked to Adani. This is what the report actually says. So the Congress party says that this brings them back to the question of the much larger fund of at least 20,000 crore rupees. So is that a connection that can naturally be drawn?
So, Vishnu, as I was saying, in response to your very first question, when, one has to actually show fraud or document fraud, one has to have a smoking gun, one has to have convincing evidence. Even in judicial parlance, we're actually told that, you are innocent until proven guilty. And, what the report has clearly documented using the evidence and, from the reading of my reading of the report, it is clear that SEBI has shared the data that they had. For instance, the report also talks about the fact that they have these automated flags and about 900 odd flags actually that went up, in the Adani case. Each one of them were investigated, and they find that in one of the stock price runs, if anything, the FPI investors actually sold, or when they bought not only in Adani, but they bought in many of the other entities as well. So I think when you look at the collectivity of the evidence, the collection of evidence that has been gathered in the report, and using high quality data, it is very difficult to actually say that there has been something hanky-panky that's been done.
Sure.
And bottom line is, if you don't have the evidence, if you don't have the smoking gun, then you cannot pin it on fraud. And I think while there may be reason for SEBI to further go into and the report does talk about some of the policy changes that happened in earlier times. I think the evidence is preponderant that there is no hanky-panky or something that can be actually proved in this particular instance.
And just briefly, a final question. What the Congress says is that the committee, this Supreme Court appointed committee, has been unable to arrive at a final conclusion regarding the violation of SEBI laws by the Adani Group. That may be correct because there is a SEBI report which is expected. But based on this report itself, do you not believe that there is fairly decisive evidence to suggest that there is no hanky-panky, to use your words, and that the Adani Group is clean in the face of the allegations which have been raised against it?
Yes, let me, Vishnu, point this counterfactual. Suppose, let's say, think about this what-if scenario where the same committee of experts had come up, with a report which said, oh, we have some evidence of hanky-panky. What do you think would have been the response, the political response? They wouldn't have actually called, these experts questionable, or basically because the message would have been something that would have been welcome. They would have actually, in fact, gone to town saying that these messengers are extremely credible. It is because the message is something that actually does not sit well with their political, conveniences. The messengers are being called into question. And, you would have noticed, I noticed this, very often on my own Twitter handle, when I put out, high quality, evidence-based, assessments, because there is nothing that can be called on the evidence, on the quality of the evidence itself. All one gets is basically some name calling, the typical, strategy of basically, trying to destroy the credibility of the messenger when the message is unpalatable. I think this is an important point. It's a trend that I've been observing, in the politics. And I think that's something which has to actually be, avoided. But more broadly, I actually, as I've said consistently, and I would, mention that when none of this evidence was there, when the Adani episode was happening, at that time itself, using valuation principles, I had pointed out that if there is a reasonable explanation, when I say a reasonable explanation, one that does not involve fraud, then the evidence of fraud is basically very, very flaky. Sure. And I think I stick to that. I'm really glad that conviction with which I actually put out that assessment has been proved right. So overall, I think the evidence is very clear that there is no way to establish hanky-panky, and the panel of experts whom I place a lot of faith on in their expertise and in their independence has come up with this assessment.
All right, Krishnamurthy, Subramanian, thank you very much for joining us, the former Chief Economic Advisor to the Government of India. Besides anything else, also responding point by point to some of the issues now raised by the Congress party in response to that report coming out. We'll take a short break at this stage, come back with more.